In this video, we're going to figure out how to calculate after-tax salvage value of an asset. Let's say before you started the project, you bought your assets for $325,000. And let's assume that this is a 7-year project. At the end of the project, you are able to sell, or you predict you could sell, the asset at $58,600. Tax rate is 23% for your bracket, and I'm going to assume that this has a tax life of 11 years, and we're going to do 10-year makers. Now, first and foremost, I do need to calculate book value at the salvage time. Since this is 10-year makers, let's go to our depreciation of assets. It has an 11-year life. This is 10-year makers. I'm gonna get the proper rate from the makers table. Start with the 10 years and double click. Now, as you can see, at the end of year 11, book value of this asset is 0. But that's not where we made our sale, the salvage sale. We did it at the end of year 7. So at the end of year 7, this asset, as far as IRS is concerned, is still worth $74,555. So book value at the time of salvage, I'm going to take that 7, find the 7 here, and on that row, as you can see, I'm going to pick the book value. All right. As far as IRS is concerned, you sold it at $58,600. That was worth, in terms of book value, $74,555. So you actually lost money. That means you are going to get a tax credit. It doesn't mean that you pay 0 taxes. Multiply the profits for IRS purposes with the tax rate. That is the taxes associated with the salvage. And after-tax salvage is simple. Take the pre-tax salvage minus the taxes. In this case, it's $62,269. Let's do another example. This time, this is going to be 10-year tax life, but I'm going to do straight line depreciation. Now, if I do that, it's already 10 there. At the end of 7 years, this is worth $97,500. Rest of my calculations are still the same. Just to give an example, let's say you were able to sell this at $125,000. Then, as far as IRS is concerned, you sold something at $125,000 when it was worth only $97,500, and it cost only $97,500. Hence, you made a profit of $27,500, paid the taxes on that. Your after-tax salvage value is indeed lower than the pre-tax salvage value.